Hi, and welcome to my presentation on the Relative Strength Index, or RSI. Thanks for joining me. This presentation is a follow-on to my previous presentation on investment behavioral biases, where I mentioned how and why I use the RSI. Later, I'll provide a brief recap to reset that context. Now, like everything that I present, I'm simply sharing what I do. It's not intended to be prescriptive, simply informational. I am not a financial professional and make no recommendations or claims. As always, you should obtain input from your financial advisor. Your decisions are yours to make. Let's go over what we're going to cover in this brief presentation. We'll start out with an overview of the RSI, including its definition, how it's calculated, overbought and oversold conditions, how to navigate to the RSI, again, a review of how I use the RSI, and then we'll conclude with a wrap-up. Here's a definition of the RSI. It is a momentum indicator that measures the magnitude of recent price changes to identify overbought or oversold conditions. Now, generally speaking, momentum indicators reflect the rate of the rise and fall of price changes in equity-based securities over a period of time. It's used primarily by traders in conjunction with other inputs to time when to buy and sell. And FYI, there are actually many momentum indicators that traders use. For example, the MACD, or Moving Average Convergence Divergence, is another popular one. I find the RSI to be the easiest use for my purposes, which again is to help combat my investment behavioral biases. Now, here's a formula for how the RSI is calculated. The RSI is equal to 100 minus 100 divided by 1 plus RS, where RS is the average gain of up periods divided by the average loss of down periods during the specified time frame, which is most commonly a 14-day summation of trading days. The formula returns the result of between 0 to 100. So when you look at the results, as I said, they can be between 0 to 100. A result of 70 is an overbought or sell signal. A result of 30 is an oversold or buy signal. And 70 and 30 are the suggested overbought and oversold levels respectively. Sometimes you'll see 20 and 80. That's a little bit more conservative, but I think in general, 70 and 30 are the most frequently used thresholds when identifying overbought and oversold conditions. Now here's an example that I created using some data from Apple from August 27th back to August the 8th. And I plugged it into an Excel spreadsheet where I included the opening for that day and the close, and calculated the gain or the loss for this 14-day period of trading days. And here's the sum of the gains and the sums of the losses, the average gain and the average loss. Now, what's interesting is that the average gain is not the total of the gains divided by the number of days where there are gains. You divide both of these by 14, and that's just the way the formula works. So the average gain or loss is not intuitive or calculated in the normal ways you might expect. That yields an RS of 2.56, and again, you plug that into the formula. Ultimately, it yields an RSI of 71.93, or very close to 72. Now, I want to point out that this example is somewhat simplified because it doesn't include the current day's trading, which makes the calculation a little more complicated. But this example, I think, is sufficient to explain or to demonstrate how the RSI is calculated. Now, in this slide, I'm going to go over how you navigate to the RSI. So the first thing that you do is you go to finance.yahoo.com. You type in the symbol of a stock, ETF, or even a mutual fund. And in this case, I use Apple, AAPL. Then you click on Chart, click on Indicators, and select RSI. Now, as I mentioned before, sometimes you'll see the thresholds as 20 and 80. At this point where you click on the indicator and select RSI, you can actually change those thresholds to 30 and 70. You'll see the RSI trend line plotted over the course of the time horizon you choose. And I use the default that the finance.yahoo.com provides, which is 1 year. And the current value of the RSI is displayed in the lower right corner. And here you'll see the 78, which is above the 70 threshold, which obviously would have said that, hey, this Apple at this point in time, it's a little bit in the past, is overbought. So let's review how I use the RSI. Again, I use it as a tool to help me make investment, buy, and sell decisions, regardless of whether it's for a core or a non-core investment position. And as I said earlier, it can be used for ETFs and mutual funds as well as individual stocks. Now let's say Apple happened to be a core investment for me. And as on the previous slide, we showed that we had an overbought condition. But I wanted to add more Apple to my core investments. Well, even though Apple may have some great news out there that I really want to buy more Apple, I'd be looking at that RSI trend line and say, before I pull the trigger and add more Apple to my core investments, I wouldn't buy it at that point in time because it's been overbought. It's not a good time to be buying Apple stock. So that's an example of how I use the RSI to curb or to combat my investment biases, whether they're cognitive or emotional investment biases. Cognitive investment biases include such things as following the herd and confirmation bias, and emotional investment biases include things like overconfidence. Now, if you allow your biases to drive your investment decisions, which they can do, then your decisions are not completely rational, and that can result in bad outcomes. Now, FYI, I just read a very, very good article in the September 2018 issue of The Atlantic. The title is Your Lying Mind. Now, if you have any doubt about how extensive and powerful our biases are and how it is nearly impossible to overcome them, then read that article. It's really very, very good. Note, using technical indicators, including the RSI for trading, is complex and not part of this discussion. I do not attempt to buy at the lows or sell at the highs. The key is to establish a set of rules and follow them. I do not expect to buy at the lows and the sells, as I said. It's worth repeating. It's just a timing mechanism to try to give me the best chance of making the best investment decision in an unbiased manner that I can. Okay, so let's wrap up this brief presentation. My objective was to provide more information about the RSI. I'm not advocating that you adopt my practice when it comes to the RSI. I'm simply illustrating what I do for informational purposes. If you want more information about the RSI, there's a ton of information available online. Let me know if you have any ideas for future presentations, because I'm thinking maybe for my next video, I might go in a different direction, because I'm really enamored with the benefits of deep breathing and something called bilateral stimulation. I don't know if I'll make that my next presentation, but I'm kind of thinking about that. But again, if you have any ideas, I'd be happy to consider them. So again, thank you very much for watching and joining me for this presentation. And I wish you all the very best until next time. This is Ted Carr saying, hey, take care.